My name is Don Kaufman. You're watching a TheoTrade presentation. This is Ultimate Trades, 2021's high probability income generator. We're going to explain a tremendous amount to you here over the next approximately 90 minutes or so. So kind of sit back and tune in. I say tune in, turn on. As I said, I welcome everybody here. A moment ago, we started a little bit informally here. You can ask questions throughout the course of the presentation here. In fact, I encourage it, chat in. By all means, I'm reading some of the chat here while I am live. By the way, I am live and broadcasting from St. Croix in the U.S. Virgin Islands. I've recently moved here in October from Scottsdale, Arizona. So, well, for the foreseeable future, I'll still go back and forth. But we've kind of taken a liking here to the Virgin Islands. I actually happen to live. If you're looking around this room, this is a gym. So when I say it's a gym, this is a gym above the house. This actually used to be this house was actually owned by a hedge fund manager. Used to manage about $10 billion out of this room. It's a pretty sizable room. Nevertheless, they turned it into the gym over the years. I'm turning it back to an office, but I've only lived here since October, so getting things kind of off and rolling. So again, let's jump into today's presentation again on Ultimate Trades. It's a risk disclosure. So we're not financial advisors nor a broker dealer. I spent approximately 15 years of my career in the brokerage world. It's one of the reasons I always throw this up there. The next aspect is copyright disclaimer, okay? This is ours. This is not yours. The other major reason I put this in here, and I always want to stress this. Listen, if you need to get a hold of me, okay, or anybody here at TheoTrade after today's presentation, I encourage it. Listen, go right here. It's support@theotrade.com. If you need to get a hold of me, you can email me. Just put Don in the heading. Okay. Yes, we respond to emails. Yes, I respond to emails. Yes, we respond to emails rather quickly as well. It's kind of the lifeblood of what we do here at TheoTrade. So feel free again to reach out after this. All right, let's get down to business. This is why you are here today. So I say this all the time, but anytime I do a webcast like this, I want you to be able to walk away with something definitive, right? And in the case of today's session, you're going to learn a little bit about Ultimate Trades, okay, and why they are ideal for the current market environment. I'll explain a little bit about what an Ultimate Trade is here momentarily. The second aspect here, you're going to learn, okay, a trading symbol used by professional traders to really kind of define what is in play and specifically, okay, why Ultimate Trades and why now. Number three, we're going to discover here where you can actually find edge as a retail trader, especially right now. I'm going to discuss an extent edge. We're going to reap the benefits of high probability trades while learning, okay, how not to take large losses. So mitigation of risk is an incredibly important portion of this. And we're also going to talk about the most viable products and what those products are, what make good candidates, what are recipes for disaster. Come on, let's throw Tesla out there already, right? You want to throw GameStop into the mix, by all means. But that's what you're here for today. And again, this is, I'm just going to let everybody know right now, we're going to go to a pretty good clip today. Is that all right with everybody? I know some of you are brand new to this. If you're brand new, hey, throw a hand up in the air. Like, it's okay to say, hey, listen, I'm brand new. For those of you that are brand new, I want you to be able to grasp big, broad strokes of logic, right? Like, just understand where we're at. If you're experienced, those that are experienced are going to pick up on the smaller kind of nuances of today's presentation. And I put together this presentation specifically for a variety of different levels because everybody comes here at TheoTrade at different levels, like absolute novice to some of the most extreme, okay, including professionals that'll come here to TheoTrade to learn. So I get that we have all ends of the spectrum in here, and I'm going to try to hit upon that. Before I go too far, our gift to you, there is an indicator that I'm going to reference several times throughout the course of today's presentation. That indicator is actually called the auto expected move indicator. And it's my feeling that if I'm going to reference this particular indicator that we're not going to sell it to, it's a $497 value. Stay with me right until the end of the webcast, and I will provide you a link directly to the auto expected move indicator. It is literally the single most advanced indicator ever compiled. And it's an indicator that changed the way we view the markets. So you're going to see this extensively throughout the course of today's presentation, because it deals in very large part, and I'll just throw it on the line over here, what it deals with: efficiency or lack thereof. So you can see this is wild inefficiency in the marketplace, inefficiency, inefficiency in a marketplace, inefficiency. And we're actually going to learn where edge lies using this particular indicator. So I'll reiterate that once again, okay? Stay with me literally right until the end of this webcast, and we'll provide you a link to that specific indicator. A few housekeeping items, again, before we dive deeply into this. Housekeeping. All right, listen, this is skill set. Pay attention. As I said a moment ago, we're going to go at a pretty good clip today. I say shut the door, turn off Skype, chat, whatever else might be distracting you. Close Facebook, get rid of Facebook, get off Facebook, whatever it is, okay? Get out of there if it deals with Facebook. Phones on silent mode, kick out the kids, definitely kick out the kids. Grandkids, they got to go too, but the dog can stay. Listen, as I said, I move quickly, okay? I have a lot of caffeine in me. If you haven't been able to tell that, you took the time to be here. This is important. Focus on being here. So a little bit about me, and then we'll jump right into this. So I watched order flow for 15 years in my career, and that's actually in very large part what kind of brings me to you. I have a very unique skill set. So here's my background. So I grew up around traders. Like, people, what does that mean, you grow up around traders? It wasn't my immediate family. It was actually my uncle's family. So I had an uncle that was a market maker in the 1970s. He started a trading firm. For those of you that are from the Chicago area or the New York area, you've probably heard of the trading firm. It was called O'Connor and Associates. Now, by the way, his name is not O'Connor. The O'Connor brothers actually gave him $300 million. They just said, when you founded the firm, put our name on the door, and he goes, done. So he started a trading firm in the 1970s, and he built the firm to over 500 seats on exchanges worldwide. And I mean, this is the exact time I was growing up. He literally founded the firm in the year that I was born. So growing up, you're around this kind of environment. He sold the company to the Swiss bank, but it was actually called the Swiss bank, back in 1992. It then merged with UBS. Okay, and still in existence to this day. He's been out of the business for years, and a multi-billion-dollar deal done in the early 90s was one of the largest financial deals ever done. So you grow up around this, and people always ask me about my background. Again, I don't know where I learned trading. I grew up around it. Right out of college, 3 weeks out of college, I had friends, cousins that traded on the floor. So I went to Chicago and I traded. A short time thereafter, I actually moved upstairs to manage and mitigate risk for a firm. And only a short time after that, it was only about 18 months after I was trading in Chicago, I got an offer from a startup brokerage firm, and they said, "You're a kid. We've heard about you. We'd like you to come on board." And that firm was actually called Thinkorswim. So for those of you that haven't heard of Thinkorswim, you've been hiding under a rock. Thinkorswim was the driving, force behind options, literally from like 2001, okay, until approximately 2009, when they were acquired by TD Ameritrade. So at that time, I actually built and ran a division of Thinkorswim. I built the whole education division. I then went on to actually run education for TD Ameritrade. And between 2010, 2015, TD Ameritrade had about 7 million clients. And what we did to build out education at TD Ameritrade, we viewed and studied what clients did. Every one of your trades that ever came through was an absolute gold mine. So we used big data analysis, and we looked at, for those of you that trade a little bit, every trade that you could ever imagine. I have statistics in my head, like, did this covered call work? Did this iron condor work? Did this work? Did this work? We studied all of it. We watched order flow, okay, in every sense. I mean, for the most part, what that means is we looked at everything you were doing. I know it feels so invasive. It was wrong, but it was so very right, because you figured out what worked, what retail clients were doing. Forget about market making and market making background, because that doesn't mean anything. It's what works for retail traders. And that was in very large part my background. And again, 15 years of that. And we launched TheoTrade in early 2016, and here we are in 2021. So that's a little bit of my background. I still do quite a number of media appearances from time to time. This is actually the last time I was in Chicago. Wow, it's kind of crazy to say that, but August of 2019 was the last time I made it into Chicago. That was in studio. I do a lot of media appearances at TD Ameritrade TV. I will do the ever so infrequent cameo on none other than CNBC. This is myself pitted against, of course, Kevin O'Leary. It's one of the most memorable clips. That's it. Let's get into it. You guys ready? What are Ultima trades? So a lot of people are not familiar. Like, you look at the word Ultima and you're like, ultimate? No, 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 no. That's not what it means. That's not what it means at all. So listen, higher volatility. Can we all agree on one thing? It's tough to get anybody to agree on anything lately, but higher volatility. Can we all agree that the markets have seen higher volatility, I don't know, pretty much in the last year? By the way, this is, it's not an advertisement. It's probably also not helping me. It's hurting me. A little Red Bull in the afternoon. It's late here already. I'm on Atlantic time, which is 2 o'clock here. Anyway, higher volatility. Okay, I think everybody can agree on that. And by the way, these are not rhetorical questions. I don't even care if you're watching this on the recording. Jump in there at any time. You're like, sure, everybody agrees. Higher volatility, it's resulted in significantly more options premium, and this makes options at a higher price. Okay, for those of you who don't know anything about options, and again, options, I said it, all right? So when I start this conversation off, options implied volatility skew is also at historically high levels. And the volatility remains at record high levels. And again, when I throw these terms out to people, okay, immediately it's just blank stare. Just absolutely like a blank stare, which it's all right. Okay, what I'm really referencing in this case, and again, I like to always say, oh no, he said the option word. Okay, and that's okay. I hope that's okay at this point. How many people here, okay, are somewhat familiar with options? Right? A couple of you guys happen to be, and we'll come back into that in just a moment. So there is something I look at quite a lot. And by the way, we're going to go back and forth to a live trading application. As I said a moment ago when I started this, I'm set up on multiple screens here. I'm reading chat over here. I'm running the broadcast over here, and I'm actually trading over here. And when I say trading, you're seeing my trading screen right here. All right. So I'm not trying to look away from you, just trying to look at the trading screen. There's a symbol that I use very frequently. That symbol is called skew. This is something we mentioned in this, okay? Skew, it looks like a bunch of dots on the screen. Great, let's actually throw it into a 15-year, okay? One thing you're gonna learn very, very quickly here, skew, okay, happens to be at an incredibly high level, and it happens to be sustained at an incredibly high level. Now, for those of you who don't know what skew is, that's okay. We're gonna explain that as we go a little bit later. So skew is very, very high, but what is also missed in the marketplace, the volatility, okay, of volatility also remains at record highs. So volatility of the volatility, which there's this word and it's called Ultima. And you go, what's Ultima? And Ultima, and you're going to love this, is the volatility of the volatility of the volatility. What we're basically implying here, okay, is that skew. And when people think about skew, you think about a distribution curve. Everything in your life that you do, everything you think of like in your life. When I say everything you think of in your life, let me just pull up a little drawing tool here. Everything you do in your life can kind of fit into one of these, right? There's really, really good drivers and there's really, really bad drivers, but most of us fit in the meat of the curve. Except if everybody is a really, really bad driver, okay, like in where? California. Come on, enough people are ripping on California. Let's get into the mix, huh? Shall we? If enough people are bad drivers, okay, then it skews the curve. Oh, come on, jump in here anytime. So it skews the curve. There is tremendous skew going on right now inside of the marketplace. And that's again, I'll show it to you later. I just want you to understand, like when we're talking about like ultimate trades, what ultimate trades really breaks down to is it's an inflection, it's a tweak, it's a twist, if you will, of what the skew should look like. For those of you that speak geek, who here speaks geek? Come on, when you have anybody that speaks geek, when I say speaks geek, I'm asking who's an engineer? Engineer, former engineer, aspiring engineer. We're talking about kurtosis. We're talking about skew, okay? And Ultima is the volatility, the volatility, the volatility. All right, enough of that. The bottom line is this. How can you use it? How can we use skew to our advantage? Skew provides edge. Skew can provide a lot of edge in the sale of out of the money options. And I said it again. I said the O word. Okay. So many traders are currently buying options. If you haven't heard that, okay. Retail traders. It's a retail disaster out there like GameStop. Everybody's like, I gotta buy me my options. Load up on the silver options before it. But many traders are buying options. And in effect, they've actually skewed. I call it tweaking because the word skew, like most people, like it blows their mind. If I mention the word kurtosis, somebody's like, he has a disease. Okay, my kurtosis hurts. All the buying of options is actually tweaking pricing. Bottom line, it's tweaking pricing. It's beneficial for premium sellers. Okay, it's beneficial to actually sell options here. Let me actually show you a little bit about this. And again, I'm going to highlight something for you here really quick. This is retail traders gone wild. Check this out. This is actually January 27th. Hey, I'm going to be honest. I cherry picked this one a little bit. Okay, I cherry picked it because there were 60 million option contracts. If somebody says on an average day, how many option contracts trade? Check this out. So on January 27th, 60 million contracts traded. Average day in what? January. Okay, average day in January, there were 43 million option contracts. You're like, okay, so what? Who cares? Oh, wait, I'm not done. On an average day in January of 2020, there was only 25 million contracts. I'd say people, okay, retail traders have gone wild. It's all about retail traders now. And I wanted to highlight that for you because this has actually provided a wicked advantage. And I'm actually going to describe exactly that. I'm going to put up a couple of trades today. All right. Again, I stress this. I stress this because we've never seen anything like it. And it's not going away anytime soon. And again, you got to learn how to do this. You're going to learn to sell some options. So, all right, I got to ask that question again. I want to make this interactive session. Many people have kind of heard through the grapevine. I mean, the way that everybody starts in this business, the way that everybody starts in options, what do you start doing? You got intrigued in options because you read somewhere and you started buying options, right? But you've heard through the grapevine that selling options is the way to make money. How many people have honestly heard that before? Right? Tons of people. And it's kind of like through the grapevine because what's weird is when you first get involved in this business, nobody gets involved in this business and goes, hot dog, I'm ready to actually sell some options. Nobody gets involved that way. Like, and if you did get involved that way, you're a bit of an anomaly. You're an enigma. And you probably got taken under the wing of somebody that probably knew what they were doing. But if you've experimented with selling options, and some people have no idea what an option is, don't worry, we're going to get you. Okay. If you've experimented with it, you're going to know there's definitely risk involved. And I like to talk about risk because that's a big portion. Today's session, you got to separate myth, okay, from reality, right? There's myths from reality, the fact from the fiction, all about selling options premium, about what this ultimate is. Now, before I go any further, do not panic, all right? Everybody's going to be able to do this because there's this part where everybody's like, oh, I don't even know what an option is. And this guy's talking about Ultima. And then he said the volatility. And then he threw a word called kurtosis. And I think I have it. I think I actually have kurtosis. Anyway, if you know nothing about options, that's okay for today's session. It is because, as I said, I just want you to grab big, broad strokes of logic. Like newsflash, the next thing I want to talk about, selling options and selling premium can be done in small accounts with under $5,000, and it can be done in retirement accounts. Now I'm going to be very forthright. That is not something that you could even do 2 years ago. That's new. There are new products that have come out, and the new products allow everyone, not just, it used to be a wide spectrum of people. Now pretty much anybody and everybody can sell options. Actually, the reality is, in a regular margin account, you can have $2,000 in a regular margin account and you can sell options premium. And that's really important. So today, for starters, as I said, look to grasp big concepts regarding probability and risk. So if you're brand new, you've never traded an option before, let's dive in, okay, and grasp, again, some big concepts. First of all, the many facets of selling premium. Already today, you're 10, 15 minutes into this, you've already heard me talk about selling options, selling premium. Selling premium, okay, it can be referred to in as a lot of different ways. You can be like, oh yeah, man, I sell options. Oh yeah, man, I sell premium. Credit spreads. But you could do a short call, a short put, right? Selling puts, delta neutral trading, selling naked. I mean, I could give you 50 different terms, and I'm not joking. I could literally give you 50 different terms for selling premium. Like, I did Christmas trees, I did reverse back ratios, I did triple naked backflips. I mean, all of this stuff. They're a way to sell options premium, okay? And selling premium can be used to create bullish trades. It can be used to create bearish trades. You can get like, hey, I think we're going up and I think we're going down, okay? But more often than not, selling premium is construed and considered market neutral, okay? So market neutrality. All right, market neutral means what happens? I hope nothing happens. What happens if something happens? Well, I hope nothing happens. We'll come to that as well. Let's get to probability and profitability. So you're trading, all right? You're trading, whatever you're doing in trading. I don't care whether you're buying, selling stock, but your trading, okay, is all based on probability. So we can create, and I say you and I can create trades all day long with 90% probability of success and still lose money. One thing I like to hammer this right up front. You know, I know there's a lot of people, they go out there and they like advertise and they're like, follow me in my trades. You'll always make money. We're right 90% of the time. Can I throw this out there right now? Because as I said, I want to separate the myths, the fact from the fiction. Like, listen, people, I've been in this business too long, okay? And I was in the regulated side of this business. You know, when I say regulated, I was a broker dealer. I had my Series 3, my Series 4, my Series 7, my Series 24, which is a principal broker dealer. Then I had my Series 66 because I actually at one point managed over $300 million. That was back in the days of Thinkorswim. There's one reality in this business. People advertise all the time and they go, you're going to be right 90% of the time. Let me tell you something. A monkey can be right 90% of the time. Okay. Why? Because probability alone doesn't make you profitable. Remember that. Always remember that. Don't ever let anybody tell you, just like, follow me, I'm going to be right 90% of the time. Sure. Okay. You can do that. What's going to happen to you? Think about that for a second. Some people understand this already. If you can be right 90% of the time, immediately, you should think to yourself, what's going to happen to you the other 10% of the time? That's the right question to ask. And I tell you, probability doesn't make you profitable. Remember that, right? Markets are always a trade-off. Markets are a series of trade-offs. Higher probability, higher risk. You can be right 90% of the time and you can still lose money. So where can you find edge, right? That's what people are here for, right? Good, because that's what we're about to get into. And I'm going to show you something really important. So for those of you that are brand new, we're actually going to go into a distribution curve. And I'm going to show you, okay, what selling options is right now, okay? And then I'm going to show you kind of what Ultima means, right? So here, when I talk about like selling options premium, again, I'm going to throw an example up here. So as I say, if you have experience, just hang out for a second because you're going to learn something. I'm telling you what, the brand newbies are going to learn something and the experienced traders are going to learn something. So here's a $50 stock. By the way, are there any $50 stocks even left right now? Probably not. Okay, you're like, everything's trading at 500. The point that I want to make with this, here's this $50 stock. You're going to go out there, okay, and you're going to trade an option. By the way, are you going to own the stock? And by the way, yeah, I don't know what stock this is. I call every fictitious stock, right? Stock. Anyway, it's a $50 stock. I do not own the stock. I do not want to own the stock. I do not have to own the stock. Right? I have little kids, so I think of everything in like green eggs and ham. Sorry about that. I do not. I will not. Anyway, I'm going to go out there. I never owned an option before, and I'm going to go out there and I'm going to sell. Okay. And you go, how can you sell? Don't worry about that. We'll come there in a second. I'm going to sell, and I'm going to sell a 60 call. You go, oh my gosh, but still my heart. By the way, that's all I'm going to do. I'm going to sell a 60 call, and I'm going to sell that call, and I'm going to collect, okay, a whopping $2, and we're going to call that a credit. Put the pen down, stop right there. Let's actually focus on this a little. Focus. I'm going to sell a 60 call. Now, the one question I get for those of you that are brand new, you don't even know options, you've never had experience with options, okay? What's a 60 call? Well, 60 call, if you're a buyer of a 60 call, the 60 call buyer has the right to buy the stock at 60. Okay. Where's the stock currently trading? Well, the stock's at 50. You go, well, then who wants the right to buy the stock at 60 if the stock's trading at 50? Okay. I'll tell you who wants the right to buy the stock at 60. Some retail client that thinks that stock is going to 100. So if you bought a 60 call, what does a 60 call give you the right to do? It gives you the right to buy the stock at 60. Okay. So how can I sell the 60 call, Don? I never owned it. So buying a 60 call gives you the right to buy the stock at 60. Selling a 60 call gives someone else the right to take that stock from you at 60. Now you're going to go out and you never did anything. And by the way, listen, I know a lot of people are like, I don't have the margin for this. Don't worry about that. Do not worry about margin. Don't worry about buying power. I'll make all of that easier later. Okay. For right now, concept. You sell the 60 call, then what do? You go, I do nothing. Everybody else is doing something. You're going to do nothing. You're going to sell a 60 call. That 60 call, let's say that it's good. This is going to be crazy. Let's say that thing is good for an entire 90 days. 90 days. I have to wait 90 days to be able to make $2. That does not seem like a good deal. Just don't worry about that. We're going to get there. What I want you to understand conceptually is this. If you sell a 60 call from a probability point of view, what can happen to this stock? Let's worry about probability first, okay? What can happen to the stock? The stock can go where? The stock can go down. So if the stock goes down, what happens to the 60 call? 60 call, after 90 days, would expire worthless. You get to keep the $2. If the stock stays flat, what happens? 60 call expires worthless. Why? Who wants the right to buy the stock at 60 when the stock's trading at 50? No one. So it expires what? Worthless. Let's say the stock goes up to what? 55. What do you do when the stock goes to 55? You go, I know. I wet myself, right? Now, that's when people start to panic a little bit. They're like, oh, come on. So they go, I don't like this. Okay, the stock goes up and I start sweating over here. But even if the stock goes right to 60, you still get to keep $2. So how do you lose money in this trade? Oh, it's easy. Okay, I'll tell you how you lose money in the trade. What happens if the stock goes from 50 and jumps to 70? So stock goes from 50 and goes to 70. You go, oh no. Someone has the right to buy the stock from you at 60. Stock's now trading at 70. You're going to lose $10 minus the $2 you initially collected. Okay. But before I go any further, freeze everything. Okay. Now, things are a little bit different in today's marketplace. When I say things are a little bit different in today's marketplace, one of the things that I was elaborating upon earlier, okay, is all right, you guys give me a stock. I don't wanna just guide this and throw up stocks. You guys give me a stock. Everybody give me a stock. Give me something good. Oh, come on. All right, Intel, somebody come up with Intel. Tesla, Twitter. Twitter has earnings tonight. Apple. Here, I'll show you something. You want to see the most marquee stock ever? Apple. Okay. Look at this. It's almost 700,000 options are trading on Apple. Okay. And by the way, the platform that I'm on right now is Thinkorswim, which obviously I worked on and for. And there's a lot of tools. In fact, where we're at right now in the option statistics, had a lot of input over the years in building this. But we also use Tastyworks. So I kind of go back and forth quite a bit, and I'll elaborate upon that maybe a little bit later here. So with that, and a lot of people are on Thinkorswim. So there's 700,000 options that trade here in Apple. And I'm just going to open up options that are like 60 days out. And people really want to know like what Ultima means. Can I show you exactly what Ultima means? The distribution curve that I drew looks like this. Okay. And what that kind of means is that options that are out here and options that are out here, okay, should kind of be trading similarly in terms of value as options that are trading here. Here is where the stock price is. This is 136. You really want to know what Ultima means? Okay. And skew and what they call kurtosis, it means this. Look carefully. These are calls. This is the at the money, okay, options. And again, I want to bring this up. All right, the at the money options right now, 66 days out. When I say the money, I'm going to clarify this. The money is trading at 136 right here. These are like the at the monies, at the money, at the money, at the money. We're going to bring up, okay, what is termed implied volatility. Now, I don't want to totally geek out on you, but here's the cool part. Implied volatility of the at the money is 33%. So the 33% is the at the money. So when you look at that distribution curve, these options are trading at 33% vol. The out of the money calls, okay, are trading as high, for instance, as 40%. You can look back historically, and people, you ain't going to see that very often. You are not going to see there is skew on the upside of the marketplace. There is skew on the downside of the marketplace. There is ridiculous edge. That is for the more experienced traders because most people aren't seeing it, okay? You want to see something really scary? We're going to go into Tesla. And again, I don't mind showing people this. And, you know, I hope nobody's offended by what I'm showing here. I'm not ripping on Tesla at all. I want to show you something interesting. Tesla is an $845 stock. Look, $845. Did you know that 66 days out, the out of the money calls at the 1700 strike, that means Tesla would have to almost what? Almost double. That means this is an $850 billion company. That $850 billion company would have to be trading close to 1.5 trillion. And yet the calls, okay, are trading for $3.50. Okay, hold on. That's what? That's over. How far out of the money is that? You're like, Don, it's almost $1,000 out of the money. Okay, but if you look at the same puts, if you look at the puts, okay, that go all the way out to 400 puts. These 400 puts, they're trading for $3. So you have to understand the market right now is giving almost doubling the chance of Tesla, the same probability as Tesla going down $400. Yeah, nobody's looking at that kind of stuff. All right, they're not looking at this wonderful distribution curve. It's tweaked, it's skewed. I don't want to make it any more confusing, but I wanted to explain to you, okay, where edge lies without having to go into too much detail. Now, before I go any further in here, the reason I took you into this example, okay, of selling, all I want you to understand right now is you can sell this 60 call and you can collect $2. Then we just have to worry about how do I maintain the risk? Okay. How does this have edge? Like, how does this impact me? How can I do it with less margin? That's what we're going to get into. That's what we're here for, right? So selling options, okay? Selling options equals positive time decay. All right. When you sell options, every day that passes sees the dwindling of options premium. As time passes, the options you sold decay exponentially. So let's take a moment for those of you that are new to this and review a little bit about time decay. Okay, how many people have seen this time decay graph before? Oh, me. Okay, so a lot of people have seen this time decay graph. So it's you know, probably like the age-old time decay graph, which is fine, right? So here, the most people think about this, right? You know, here's an option, and up here that option's worth $3, and then over here that option's worth $2.80, and then over here it's worth what? $1.60, and before you know it, you're like, it's trading for 30 cents. It's not even worth me selling it anymore. It's zero. Okay, how many people have been through that? So these are not rhetorical questions. Jump in anytime. So you had this $3 option, then to 2.80 to $1.60, went to 30 cents, and then all of a sudden it's worth absolutely nothing. You go, oh man. So everybody hears this. Options burn faster the closer you come to what? Expiration, right? Options burn faster the closer you come to expiration. Now, this is where everybody's head is about to just go, okay? Because that's what you learn when you are a kind of neophyte in this business. And that's not a negative term. Like everybody learns this business the exact same way, I think. Okay. Again, I am the enigma in there. I grew up around traders, like literally grew up around traders. And we used to have discussions around the dinner table, about like what's your VAMA? Okay. It's a really exciting conversation over like Thanksgiving dinner. One of the first times I ever went to the trading floor, I was probably about 7 years old, and we went to the Chicago Board Options Exchange on the day after Thanksgiving. That's why I was mentioning Thanksgiving, because it's a half a trading day, and it was actually like bring your family on the floor day. Seriously, that's how they used to do it. They don't do that anymore. After September 11th, nobody got to go on the floor. It's brutal. When I say on the floor, I mean in the pit. So options decay the faster you come to expiration. Just hold on for a second. Now we're going to get a little bit more serious. Now you're going to discover probability and premium selling tactics, right? So when I say it's going to get a little bit more serious, let's get on the learning curve right now. So we're going to go out, and this is a $100 product. And in this $100 product, we're going to start to sell some options. Okay. So I'm going to go out all the way out here. And when I say all the way out here, we're going to go all the way out to the 130 calls. Now you'll notice I'm talking about calls. It's okay. I'll talk about puts as well. Calls are easier for people to comprehend. So we're going to go out there and we are going to sell, okay, the 130 calls, and we're going to sell them. Let's say in this case for $3. So bring that down here. We're going to take in, okay, a $3 credit. We're going to take in a $3 credit. So go out there and sell the 130 calls. Okay, now what do? I go, I do nothing. Now, I'm going to get much more into this in a moment, but I want you to imagine going out there and selling the 130 calls. Now, technically, if I asked if this is bullish or bearish, it is technically bearish, because you would profit faster if the market went down, but it also has a flair of market neutrality, because if we went up a little bit, you'd make money. If we down a little bit, this is big. I mean, you have a $30 leeway. And the cool thing about this is, and the reason I like to explain them with calls, like everybody always talks about, I want to sell puts. Okay, you want to sell yourself into a heart attack. That's the way to do it. But when you go out there and you sell calls and you collect $3, okay, the cool thing about this is, what can hurt you? What can hurt you? There's only one thing that can hurt you, and that is what? The market has to do what? Rally. So what's the market been doing lately? Rally. And as the market goes up, what happens to you? You go, oh no. Okay, but still my heart. But the cool thing is, when the market rallies, what does volatility typically do when the market rallies? Like for those of you that do look at something called the VIX, okay, what does the VIX do when the market rallies? The VIX usually goes down as the market goes up. So dealing with a big rally is kind of easy. It's kind of easy to mitigate risk. And that's why I like to talk about this. So you go out there and get this $3 credit. Now, do you want to collect that full $3? You don't even have to collect the full $3. Okay. What if I could show you a way really quick here? I'm going to show you a way you can collect. Okay. Get this. You'll collect 50% of the $3, okay, in the next, let's call it 35 days, okay? If you could collect 50% of $3 in 35 days and take very, very minimal amounts of risk, would it interest you? Because whatever stock this is would have a tough time moving. $30 is a big move. $30 is a big move in any stock. When it's a $100 stock and you move $30, talking about a 30% increase. Okay. Anybody? Because now we're actually going to get a little bit more serious. So I'm going to go into the marketplace, and I'm actually going to show you this in context of the marketplace. And here's where Here's where everybody gets a little bit, maybe lost for the first time. So we're going to come in here and I'm going to move away from Tesla for a second, because I think everybody understands like Tesla, and that was kind of a crazy example, but we're going to go into the spiders. Okay. We're going to go in the spiders and we're going to go all the way out, 101 days out. Okay. Like 101 days. And let's go over here and pull up some delta, delta, delta. Okay. And I'm going to go way, way out of the money. I'm going to the nosebleed section. Okay. Delta, delta, delta. And I'm going to pull up an option here and just make a quick point. Let's highlight this little monkey right there. Okay. That little monkey right there. And what we're looking at here, and again, I'm going to write this up on the screen because I want you guys to see it. We are looking right now at a 435 call. 435 call. How many days is it good for? 101 days. This thing has 101 days to go to expiration. Now, we just talked about before, the closer you are to expiration, the faster the option is going to decay, but couldn't be anything further from the truth. So I can go out there and I can sell the 435 call. What can I collect? And I'm going to say $1.34. Okay, because right now it's $1.32, $1.34. I'll just go off the ask. Okay, that's all I've done, right? Okay, what is this option, this 435 call? What's it going to be worth exactly 35 days from now? Well, the way to figure that out, you see these 101s? Is everybody with me right now? If you look at the 101s, by the way, you do not, no leaps, no leaps. Okay. If you see these 101, that's the number of days left to expiration, 101 days, long option. Then I want you to look at the 66-day option. Why look at the 66-day option? All other factors held equal. Okay. If I have a 435 call with 101 days left, what's a 435 call going to be worth with 66 days left? I don't know. Let's go look. Let's go look. You see, I got a position over here. Let's go look at the 435, 435, 435. What are they worth? What are they worth? Boom, there they are. They're worth 40 cents. Okay. So hold on. So this is with, box that out. Okay. That is the 435 call with 101 days. Then we have the 435 call, okay, trading for what? For 40 cents. That has 66 days remaining to expiration. Now I'm assuming the market doesn't move. What if the market does move? Who cares? Who cares? Look at this. Your option went from $1.34 to 40 cents. I'm so far out of the money. And again, this is not something that was around, okay, a couple of years ago. So this is where people are like, holy crap, the decay of far out of the money options is spectacular. It's spectacular because the retail traders are all over they're all over the marketplace. The retail traders are like, buy, 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 buy. Okay. They're like fleas, man. They're everywhere. They are all over the marketplace. They are bidding up volatility, and they're actually even buying duration in there, and it's a total free-for-all. And right now, and again, this is just a prime example. I could show you 100 different examples here. This is an option you can sell for $1.34. It could be worth 40 cents. That's from 101 days to 66 days. So in 35 days, I actually said 50% of the premium. That's a lot more than 50% of the premium. You're collecting between 60 and 70% of the premium of an option in 35 days, and you're nowhere even near expiration. So do not for a second, okay, listen to somebody when they go, but option decay is better when it's shorter. So a lot of newbies are in selling stuff 3 days and 7 days and 8 days. You're going to get killed. You're going to get killed. And I'm going to show you, you're going to get killed. Look, option volatility is really, really low in here, really low. So you're selling low implied volatility. The further you go out in time, there's more implied volatility. Okay. Skew is huge. Okay. That's what Ultima Trades is about. Now, okay. I just wanted to kind of detail that just for a second, but you have to understand there's another side to this marketplace. There's another side to this marketplace that people aren't even seeing yet. We can go out here and sell way out of the money options here and way out of the money options over here as well and get net neutral, which we're going to come to here momentarily. We okay so far? Because all I wanted to show you is where edge lies. And right now, edge lies in duration. Edge lies in knowing the right option to sell, okay? Why sell options so far out in time? So you've noticed, because I pointed it out, in my example, I sold options out a few months in duration. Typically, retail traders sell shorter dated options. Therein lies where you're tuning in. That's why you're tuning into this webcast, okay? For specific criteria. And that's what's of critical importance, okay? Like, listen, anybody can come out there and they can say, sell options, sell options. This isn't just selling options. This is Ultima trades. And that's what we do here at TheoTrade. It's criteria. And we actually develop like, hey, what are the right options to sell? How far out in time? Somebody said, what delta over there? It's actually a great question, okay? And it's critical. Why sell these? Why sell those? In fact, when you actually bring these up, okay, somebody looks at my positions in here. Let me actually pull up. Am I on the right account? I am in the right account. You look at this and you go, well, if it's such a good trade, how come you haven't done it? Okay, that's an excellent question. Let's do it. So I come out here and I tee this one up. By the way, the option's trading $1.31 and $1.33. Eyes on that, $1.31, $1.33. I'm going to come in here and offer $1.33 just for a one lot, just to actually show you. Fire at will. Now, if you do not have margin, do not fear, because there are products that you can now use that have minute amounts of margin. I'm just showing you in this example. So now the market's a dollar. Watch this. The market's $1.30, $1.33. You ready? Let's do what's called carp the market. I'm going to come in here and hit cancel replace. Watch this marketplace. I'm going to change the market, $1.30, $1.33. I'm going to change the market to $1.32. You ready? They're going to change this market to $1.32 now. It's a miracle, because at that point, I am the best. I'm the best offer on the deck. And in fact, if I click on that little W and I scroll up to the top of the screen, look, Captain One Lot rides again. I am Captain One Lot. I like to say that. Captain One Lot rides again. What you're looking at, that's me. And I'm live here. You're like Z, okay, for Don. Z Don. I don't know, but I'm Captain One Lot and I'm actually offering that one for sale. And that's a trade that I can have on for the next 33 days. Now, not everybody can do that. And again, I don't want you to do it yet. I want you to understand what you are doing. By the way, you want to have some fun? You want to get this thing filled? Let's come in here. Let's hit cancel replace. We're going to hit them at $1.31 and they're going to fill me almost immediately. Okay. So if I carp this market to $1.31, look at that. I even tighten the market to $1.31. Man, there is like low liquidity today. Check this out. Okay. Now we're $1.30, $1.31. All right. I'm not paying. Okay. Or I should say, I am not selling this for $1.30. I'm going to work this thing at $1.31. Everybody else is $1.33. They have to trade through me to do anything. So I'm going to leave my offer in there right now. Let's close that up. That's what criteria really is about. Now, before I go any further, okay, because this is the important part of being able to sell premium, right? Okay. 90%. The trade I just did, and I always like to elaborate about this. The trade I just did has a 90% probability. In fact, okay, I like to say this, and I qualified a statement earlier with the, I said, like, you go to these websites and they're like, come learn with me. I am right 90% of the time. Now, how many people would agree with this statement? You could probably take a monkey and train a monkey to be right 90% of the time. You may not believe that, but I'm going to show you how you do this. Give me any product, any stock that has options, and you can be right 90% of the time. All you have to do is come over here, right, and go what's called probability out of the money. All right, the equations for probability in the money, probability of touching, probability out of the money. That's stuff that I personally worked on at Thinkorswim, right? So if I want a 90% probability of, what, making money, look, lo and behold, check that out. Check it out, right? You're like, hey, guess what, man? Don's right now, 90%. We should follow Don. He's right 90% of the time, right? But that doesn't necessarily make you money. And by the way, you can go to any product out there. Somebody mentioned Twitter earlier, okay? You want to be in Twitter? Twitter has earnings. When are they coming out? After the bell today. Let's open up 66 days out. There's a 90% trade. Boom, done. Okay, you name a product. And again, that's what you got to understand. And I'm just using calls today because it's easier. I'm using calls because it's easier. I'm going to come into puts in a second. But this is where I say 90%, it just sounds great. And I'm telling you, just, don't take notes right now. Just pay attention, because this is the part that's critical. 90% probability sounds so good, but people forget about what's called the 10% hammer. And if you've never heard that term, It's because you haven't traded yet. And it's okay if you haven't traded yet because you're here to learn, right? So when you trade high probability strategies and you're wrong, you get hammered. That's what it means. The market is also, it's very evil. The market to me, and I've got like my own, I don't know, I like visualize the market in my head as like this entity, okay? And I'm very diabolical when I talk about the marketplace because I'm convinced at all times the marketplace is out to get me. And I don't know if you guys have ever had that before, okay? By the way, don't worry about margin. I told you, I cover margin in a minute. The market is diabolical. The marketplace wants you to do this. The marketplace wants you to be right 90% of the time. And so for those of you that have sold options premium, you know what happens. You sell options, you collect $2. The next month you sell options, you collect $2. The next month you sell options and collect $2. By the fourth month, you're not selling options and doing one contract. By the fourth month, you're like, haven't had a losing trade. I'm going to be the next Buffett. Okay. You know, you're stepping up. Now you're actually, instead of trading 1 lots in the spiders, you're trading 10 lots in the SPX. And the marketplace is like, come on, like a fishing hook. Come on. Okay. I just filled. So I think you guys probably heard my fill. I go, come on, come on, come on. And the marketplace lets you place 3-4 trades profitably, and it waits for the fifth trade, and it's like, bam, it's a train wreck. And your losses are going to exceed the gains of the previous 3 or 4 trades or 5 trades, okay? And I say this down below. It's like I could see your account. Of course I could see your account. 15 years I could see your account. I know every nuance, okay, of selling premium backwards and forwards. I've seen people go through this life cycle 1,000 times. Like literally like 1,000 times. I've seen people like get into selling premium because they don't know how to control the risk. They don't do anything. And they do stuff like this, okay? They go, I can fix it. I know I can fix it. Listen, fix is a really, really dirty word in this business. 15 years in the brokerage world. I'm totally a cynic when it comes to fixing, okay? Good trades gone bad. You know, so good trades gone bad. Anytime you're fixing a trade, you're just adding more risk to an already losing trade. You know, they always say like, never double down on something you're losing. You go, oh, I'm not doubling down. I'm fixing it, okay? What's the difference? Listen, anytime you try to fix a trade, what is it? More risk and more transaction costs, and it's unequivocal. Like sometimes fixing may work, but the very notion of fixing a trade throws literally good capital after bad capital, right? And this is where like you have to learn this. And if somebody doesn't explain this to you, you will go through this. And everybody that has ever sold premium will tell you this is precisely what will happen. You will make money, huge loss. And then you go in there and you go, I did it wrong the first time. Okay, so the second time you go make money, try to fix, still get killed. Yesterday's trash. Take a car, drive it off a cliff, and then bring it to a body shop. Okay, what are they going to tell you? Take a car off the cliff into a body shop. What are they going to do? You're like, you towed it out of there, and you're like, oh man, look at that car. That's a nice piece of crap. Okay, and I'm going to say the exact same thing about your losing trade. It's a piece of junk. Let it go. You're never going to be able to fix like losing trades. Again, sometimes it'll work. Okay, but the notion itself is throwing good capital into a losing proposition. You got to do this right. You have to learn, okay, how to structure this from the get-go. Okay, I don't like this whole good trades gone bad and I can fix anything, because I'm telling you right now, from my perspective, is this: you will wake up one day and the marketplace will be down huge and it's over from there. You will actually be watching the screen one day and a tweet will come out and it'll change the way you feel about the marketplace forever. Jerome Powell says, no more. Okay, Janet Yellen, no more. And the marketplace, you end up as yesterday's trash. You got to learn how to do this the right way. What's the right way? So now what I'm going to do is I'm going to give you a little bit about the structure of how you should be thinking about selling options premium. I'm going to just warn you right now, what I'm about to do is going to get a little extreme. Okay, so you have something like the spiders. Okay, and I'll go back to the spiders here in just a second, but you have something like the spiders, and we were looking at Twitter a second ago. The spiders are a $390 product. So let's use them. Okay. Let's use the spiders. Okay. So here is SPY. Whoops. I'm already doing damage, all right? SPY is trading at $390. Now, what was I doing a moment ago? I was out here, okay, and I was selling what? Let's call it like a a 335 call, okay? Maybe I also go out and maybe sell something like a 350 call, okay? I just want you to understand that. Then I could come down here and I could technically sell what? I don't know, maybe something like a 245 put. Let's go take a quick glance. All right, let's go take a quick glance at the marketplace, because when you start looking at this, now I'm going to go maybe 66 days out, and I just want to show you. People are like, I want a 90% probability. Look at this. These are the 328s. The 328s. I mean, that is far out of the money. That's a 10 delta. You can go out here though and still collect about $2. $2. That's a 90% probability trade, and you're at the 318s. The 318 puts are still trading for $2. Okay. And you start looking at this and you go, okay, so that's 66 days out. Okay. Look at this. If I went 101 days out, 101 days out, these are options all the way out. And again, all of these are 90% probability trades. I could collect about $2 trading the 286s, 286s. But here's the key. Okay. What you want to learn in this business, especially if you trade something like the spiders, okay, is first and foremost, they might be trading at 390. You could be selling way out of the money here. And again, you can sell, as I showed you a moment ago, sell the 285 put. What's the risk then? What could happen to you? And I'm serious about this. What could happen to you if you sold the 285 put? Or what could happen to you, okay, if you sell, a call? You sell, for instance, the 345 calls, okay? And I stress this to you because so few people, like, they ever think about that way. Like, what can happen to you? And I tell you what happened to you. First and foremost, you never go out there and just sell one call or sell one put. What you're actually going to do is you're going to build a little bit more, okay, of what we call an inventory. I'm going to sell a couple of these, and I'm going to do it where it's not going to tie up a tremendous amount of margin. And then I'm actually going to use, because the real danger here is what happens if we're at 390 and you wake up one day, okay, and the market is at 300. All of a sudden, the SPY goes to 300. Then what are you going to do? Okay. There are wonderful ways to mitigate risk here. The SPY, okay, is at 390. Okay. You can use a trade called the RTS spread. You know what an RTS spread? It's called a risk twist trade. The risk twist explodes in value if the marketplace crashes. The risk twist, okay, maybe the trade will cost you $1 for a quarter. I got a better one for you, okay? You could use a trade called a VIX volatility spread. You go, what's a VIX volatility spread? It's a trade that will literally cost you nothing up front. Some of the trades are actually even done for a credit. And if the marketplace crashes, the VIX volatility spread will explode in value. What we are going to do, okay, is we're actually going to teach you to come in here and to sell options on either side of the marketplace. And then you're actually going to go and you're going to, okay, control risk. How are you going to control risk? A very, very cost-effective, a very small trade. You can use an RTS. You can use, okay, a VIX vol spread. And this is where, like, the deer in the headlights, you don't have any fear of this. You shouldn't have any fear of this, because they're easy to place. These, what do? You go out there and sell something. What do you do after that? You monitor them, because you have risk controls on. You have ways to mitigate risk. What selling options premium is about, it's not what you think. It's not about go out there and sell something and pray, and sell something and just I hope we don't move, because the reality is sooner or later we do. And with these risk control metrics on, okay, that's one of the most critical things. And I stress to you, okay, if you're like overwhelmed right now, that's okay, right? This is the full Monty here. When I say the full Monty, I show everything I do in my account. When I say everything I do in my account, here, let's go back to last 300. You know what? I'll go back 360 days just in the VIX. Okay. These are some of the VIX volatility spreads that I've done over the last 300 days. This, and I'm telling you right now, this is a risk mitigation. I don't want to make money on this trade. I just hope to never use the trade. Think about this. This is like, you're like, I have, okay, a bazooka. I never want to use it. If these trades are making money, you have a problem. Look at all of these. Okay, look at them. This is my account. By the way, this is my account. I'm 360 days back. This is one of my accounts, right? You can see I put these trades on for like 5-cent credit, 2-cent credit, 5-cent credit. And I'm going to show you in a moment a bunch of my premium sales. Okay. All of these trades. Hey, take a look at this. Just the other day, I had to close one for a very small profit. The market actually moved down big 2 weeks ago, and I closed one of them for a profit. You realize, like, again, in the last 360 days, the only thing that got crazy, I know I have one of these. I apologize, I'm moving to a different account. I had one of these trades that exploded in value last March, and it saved me, okay, a bundle. Look at this, okay? That's from basically February into March. Again, these are risk mitigation strategies. And when I say I show you everything, I show you everything. Listen, you have got to learn how to do this, okay? But you have got to learn how to do this properly. And you can't, this is why you want to sell premium. This is why you want to learn about ultimate trades. First and foremost, premium can now be sold in small accounts. Even if you have under $5,000, you can do this now in a retirement account. You want to sell premium because, first of all, it's going to produce positive decay. And I can't stress this enough. Like, again, you could do it in a small account. Produces positive decay, which is actually money in your pocket for every day that passes, right? Enhance existing positions. For those of you, if you want to go out there and you're like, I'm long stock, you can learn to sell premium against stock, but you have to learn the right options to sell, okay? Provides a high probability of success. You never need to buy or sell the stock. And again, you can be wrong on market direction. I don't want to sit here and preach to you about the MACD and the Fibonacci. Listen, I think all of you realize that this marketplace, okay, it's gone totally ballistic. The marketplace is completely nuts right now, and it's being fed by the Fed, fed by the Fed, fed by the Treasury. And, you're just waiting for the other shoe to drop, okay? It hasn't happened yet, but a lot of you, maybe me, okay? I don't want to go out there and own stock right now. I just don't. I don't want to own stock. You go, oh, you're missing out. What am I missing out on? I'd rather sell premium, okay, and be able to actually sleep at night. Because if I'm buying stock right now, I'm not sleeping at night. Listen, I'm telling you, you need this in your life because this marketplace right now, it's giving it to us. People are out there and they're buying options, and they're buying options in mass quantity, right? And it's giving the sellers edge. And it's the first time in years that the sale of premium, and specifically the sale of Ultima premium, has worked. Listen, selling premium can potentially bring in consistent returns while minimizing risk. And I can teach you the risk mitigation tactics. If you want to learn this, okay, and you want to learn, okay, really how to mitigate risk and learn how to sell premium and learn ultimate trades, you got to discuss criteria, okay? Listen, here are a few live trading examples. So I'm actually going to show you just some of the recent trades that I've done. Some recent trades, as I said, complete full Monty here. I will show you every single detail in my account. Listen, variations of all of the following trades that I'm doing can be done with as little as $2,000 in a funded brokerage account, okay? And all of this can be done inside of retirement accounts. That's something I like to hit this, okay, again and again and again, because I think a lot of people, they immediately rule out the sale of premium. You shouldn't, because right now things have changed. And again, a new product has come on the scene where you can actually do this for a really minute amount of capital. And what you're doing out there is, listen, you got to start somewhere. You got to have consistency. You got to go out there and start hit singles and doubles. So if you have a small account, it's a great way to start to get consistency. These are, when I say examples, okay, I wanted to give you examples. And I wanted to give you examples in positions that are formidable. So Tesla, tell me that Tesla isn't the scariest thing you've ever seen, okay? This is selling a call naked in Tesla. I wanted to show you a very high risk trade. You wanna know why I wanted to show you a high risk trade? What's Tesla done over the last couple of months? Tell me, what's Tesla done over the last couple of months? Gone straight up. It's been flat over like the last couple of weeks, but it's gone straight up. Here's actually a trade that was done November 30th, and it was closed December 4th. I actually sold a 950 call for $3.90, and I turned around and I bought it back for 65 cents. It's an 83% return, okay? Now, again, I'm not here to grandstand anything like that. I'm not going to just show you profitable trades. I'll show you losing trades too. But right now, what I wanted to show you is in the face of adversity, I'm actually selling calls. The market's going up and I'm still profitable. How's that possible? Because there's skew. And it's huge. Watch this, the next one, okay? The next trade I've gotten here, okay? Same deal. This one is also inside of Tesla. I do the same trades again and again. Here is December 14th, closing it December 21st. Here I actually sold the same call, the 950 call for 425. I then turned around and bought it back for 42 cents. By the way, 425. If you do one contract, that's $425. Let me change the color here, make it a little easier to see. One contract is 425 bucks. Okay. And everybody's like, what about the margin? Don't worry about the margin. I told you don't worry about margin because we can get through margin, right? It's a 90% return. It's a 90% return inside of a week on a stock that, remember, Tesla's going straight up. Okay. Wait, I got another one. I just threw the Tesla trades in here because it drives people crazy because I was dead wrong and still making money. Here is one January 8th to January 11th. I sold, this is the 1260 call, and I bought it back. By the way, as I said a moment ago, I show everything. When I say I show everything, I'm showing you screenshots, and this one made 58%, yada, yada, yada. You know what? What good are screenshots? This is my live account, okay? Come right over here to Tesla. Here are the trades. Here are the trades, okay? So look at this. This is like the craziest trade. I actually, I sold both sides of the market, covered that one, right? Here's another one. In fact, this is, you know what? This is going back 360 days. It's not fair. Let me just go back. I say it's not fair. There's a lot of trades in here that are old, but let's just go back like the last 50 days in here. 50 days. I sold stuff, I bought it back. I sold stuff, I bought it back. Okay. And go back again and again and again. Tesla, I'm actually getting short Tesla and making money on the short side because so many people are buying calls. I'm the one selling them to them. Think about that, 58% return, and the stock has gone straight up, okay? Here's bonds. Now people go, I've never traded bonds before. That's okay, I just wanted to show you could do it. Again, I wanted to throw a little bit of different flavor in here. This is a trade I actually did in the bonds, okay? I opened it on the 12th, closed it on the 13th, 14 ticks to 6 ticks. 57% return. If you've never seen ticks before, basically, I made a 57% return. This is about the equivalency of about $180 inside of a day. That's it. For one contract, it's only about 180 bucks. Here's another short bond position. I made 53%. Sold something for 15 ticks, closed it for 7 ticks. Again, 53% return. Again, about $180 in terms of P&L. Here's IWM. Now, IWM, again, I wanted to show you trades in the face of adversity. IWM, has anybody here looked at IWM recently? I'm serious. Have you ever looked at IWM? IWM is the Russell. Go into the chart, okay? Go to the chart here and go to IWM. Tell me this thing is not straight up. It's straight up, okay? It's insane. It is absolutely unequivocally straight up. Here, I actually sold a call for $1.46. I bought it back for 56 cents. It's a 62% return. Again, it's all the way at the 231. I was dead wrong and still made money. Why? Time passed. Okay. The market may have moved my direction a little bit. Here's another IWM short call. Okay. Again, the market moved against me. The market rallied in this time frame. And look, this is a longer time frame. This I actually did on January 12th, all the way to what? Here we are on February 1st. I sold this thing for $1.16, bought it back for 55 cents. People go, well, listen, if you do one contract, who cares? You collect 50, 60 cents. That's 50 or $60. Okay, you're like 60 bucks. Yeah, and if you do 10 contracts, I want you to think about this. If you do 10 contracts in this trade, okay, now you're collecting between 500, okay, or even 100 contracts, 5,000. Or again, you could go out there and do a lot of little trades and sprinkle them to control some of the risk, right? Here, let's go back to Tesla. Again, Tesla, here's another trade. Because I was doing these trades in Tesla to prove the point that the skew is so ridiculously big, but you have to know precisely the right option to trade. This is a 76% return on a product that's gone straight up. Now, I don't just sell calls, I also sell puts. Here's actually a SPY put. Look, is this getting recent enough for you? All right, I actually covered this last week. I sold a put for $1.46, covered it for 58 cents. right? Then I went out, let's show you another one, okay? Then I went out and did another short put. This one, again, sold January 29th, covered it on what? February 3rd. I sold this one for 240, covered it for $1.20, 50% return. If you see anything consistent about this, okay, look at my returns in here. Next short put, okay, covered this one what? February 4th, 51% return, okay? Listen, what better time? I'm just taking you through trade after trade after trade after trade, okay? All of this really, really recent stuff. And again, I've been on the wrong side of the marketplace and still hitting degrees of profitability. It's about risk mitigation. It's a great time to learn a skill set, and the skill set that's going to last forever. Okay. I mean, when are people ever going to have time like this again? Some people are actually quarantined. Some people aren't working. Listen, what I'm showing you here, I don't want you to believe that this is sitting in front of your screen all day long and trading, because it's not. This is literally go out. And as I showed you a moment ago, I went out and just sold an option. Okay. A moment ago, I literally just went out and sold an option, and I did it in the spiders. Okay, I did it in spiders, and here you can see my fill is down below. I filled on the bats for $1.31. Okay, I got a bunch of spider trades on. That's it. Okay, for better or for worse, I got a bunch of spider trades on. Listen, part-time stuff. You sell the premium, you mitigate the risk, you move on. You can even use good till canceled orders to close this stuff. If you're quarantined, it's a great way, okay, to emerge stronger and in better financial shape. Listen, what our members are saying, okay, here at TheoTrade, we have a chat room. People chat in constantly, and I just took a smattering from a couple different time frames. Okay, Daniel Fabian, hey guys, new member here. Been lurking in chat for about a month. Was short the spiders. TheoTrade is the only membership that I've ever had that pays for itself and then some. Brent W, you won't find a more supportive and a more profitable room anywhere in the retail business. Ali actually said, Don, help me pay for a year of TheoTrade subscription with the QQQ. Okay, again, if you do not, I don't want you to think that this particular strategy is time consuming. This is not day trading. This is the sale of premium. This is ultimate trades. And every trade that I showed today, okay, was actually displayed live at TheoTrade, which I'll show you here in a minute. The trade results, okay, we're showing it's excellent for part-timers. Selling ultimate trades and premium sale is hands-off. It uses set it and forget it strategy. Okay, so as I showed you, like, you don't have to necessarily be glued to the screen. Some characteristics of selling Ultima Premium, okay? The attributes of selling high probability trades are undeniable, okay? So you never have to buy or sell the stock. And again, you wanna focus on this, because in this marketplace, I think that that's a critical one. You know, you wanna trade high probability stuff. Everybody wants high probability trades, but I don't wanna buy or sell the stock, because I look at stock right now as being catastrophic amounts of risk. I do. Okay, risk is limited to precisely your comfort level. We can actually dial in your risk. I mean, dial in your risk to whatever your comfortability. If you say, you know what, I have a $200,000 account, I got to mitigate my exposure. I can only possibly have like 10 or 15,000. You can dial it into your comfort level. You're never going to use a stop order. I don't even use that word stop. Stop is a 4-letter word here, because it'll get you crushed in the sale of premium. You can vary time frames, and that'll actually help mitigate or minimize your risk. The probability of profit is wildly high, and it's a perfect strategy if you do have stock. And again, I don't mean to scare anybody away. But if you do have stock, use this against the stock positions right now. You have to, because it's going to enhance whatever you're currently doing. It's an excellent tool, though, also for those seeking to start to build an account for consistency. And I want to hit this again. New products now allow, okay, for the sale of options in nearly any account size. Somebody's like, what's the margin? How about you can do the exact kind of trades that I was doing a moment ago and only have maybe $1,000 at margin, $600 at margin? Because somebody asked about the margin. In the spiders, okay, we'll give you an alternative to the spiders. You can do a very similar trade, $600 at margin, $1,000 at margin, okay? That's it. It is very, very easy now to do this without having to have that huge account. But you got to learn, okay, to build a portfolio of options. Listen, do not let options intimidate you. That's one thing I hammer. Do not let options intimidate you. Selling ultimate trades and selling premium can be done for minimal credits, but minimal risk. But the sale of premium, it's a massive power saw. Listen, if you want to learn this business, okay, Options are going to be the quickest, the fastest, the safest, the easiest way to get where you want to go in this marketplace. But if you do not know how to use them correctly, you're going to lop off a couple of fingers. And I'll tell you, anybody that's in here that's ever sold premium and doesn't know how to manage risk, okay, has lopped off fingers. It's the same thing as like, you saw a chainsaw, you're like, I'm going to cut down that tree. If you've never seen a chainsaw in your life, okay, that thing can be dangerous, right? Again, options are the exact same thing. You gotta learn to use them correctly. And that is what we do here, okay? Listen, you can sell Ultima Premium and minimize risk. Maybe you don't have options experience. Maybe you have a limited experience in trading option trades. As I said, do not let options intimidate you. And I don't want to hear, somebody always says like, oh, the brokerage firm won't let me. Yeah, they will. We have that covered for you. That's what we do here at TheoTrade. You will need these strategies for the foreseeable market future. I mean, it's amazing. We're a year after COVID. Volatility hasn't died down. Volatility will contract and it'll expand and it'll explode. This is only going to get better. The retail world is on, people. 60 million option trades, 60 million contracts. It's insane, that kind of size. Listen, we can show you how, and we can show you when to sell premium in a matter of a few hours. What we do here at TheoTrade is we create detailed recipes for every strategy, including the sale of Ultima trades, okay? Listen, you wouldn't bake a cake without a recipe, so why trade without one? And when I start talking about recipes, literally we put together, all right, specific and detailed criteria, step by step, okay, to walk into these trades and then more appropriately to get out of the positions. Listen, you just got to come in here and be prepared, not scared. And that's a critical aspect of it. This is what you need to know to sell Ultima Premium for a living. These are steps and criteria. You got to learn what underlying stocks or indices make the best Ultima Premium selling candidates. You just saw me talk a little bit about spiders. You just told, hey, I showed Tesla, I showed IWM. There's a lot more to it because you need to know exactly what volatility you should seek out. You have to know what expiration do I select. I kind of have fun with expirations, but you ever pulled up a spiders, okay? Or better yet, the mother of all products. This is the SPX. The SPX, I termed it the mother of all products. Look at this, 22 days, 24 days, 27 days, 29 days, 31 days, set, hut, hike. I mean, it's insane. Look at this, 128, 108, 101, 100. You know how many expirations there are? It's insane. You got to know exactly what expiration to get into. Think about that. You got to know volatility because the volatility changes. How do you know if ultimate trades are going to work if volatility changes? It will, but you have to be directed towards the right products, right? What options expiration do I select? Do I do a month? Do I do 3 months? Because I went out 101 days, right? What should be the delta of the option I sell? Delta, delta, delta. Okay, what is delta, right? What options do I buy against my position? How do I actually go about building the position? When I say building position, do I sell calls? Do I sell puts? And then if I sell calls and sell puts, what do I actually use to control the risk? Okay. Do we need a large amount of capital to do this? Absolutely not. And I keep hitting upon that because there's newer products that you don't have to have a large amount of capital. What's the right amount of risk for me? Everybody's different. And I say me because I'm a little different. Maybe I've been more experienced. I can probably take more risk. You're new to this. You have $5,000 in your account. You don't want to take a big hit, right? What are the percentage returns supposed to be? What kind of returns can I generate? Right? What kind of risk do you want? I mean, this is critical. How do I protect myself from market crashes? I mean, you're going to sell options. You're going to wake up one day and all hell is going to break loose. Sorry for the phrase, but that's the reality of this business. And you got to actually be prepared for the idea that we're going to wake up one day and it's all going to be over and you're going to be just fine. Let me show you what we do here at TheoTrade. TheoTrade, again, we create recipes in trading. Listen, trading's all about answering the what ifs. What do you mean, what if? Okay. What might be a good stock or ETF candidate for you to sell premium? What's the correct options expiration cycle? How much capital do I commit to generating premium? What strike options do I sell? What strike options do I buy? How can I limit my risk? TheoTrade has your answers. So we build recipes with definitive criteria. They're literally checklists for each strategy and each unique variable you're going to encounter. And we say a checklist, okay? The whole idea of a checklist is and again, in my mind, it is a pre-flight checklist. So for those of you that understand that, somebody gets into a cockpit of a 747, the pilot doesn't just hit the gas and go for it, throttle up, and we're ready to go. They go through really definitive checklists. I mean, step by step by step. It's pre-flight. But then once they're actually in flight, not everything always goes swimmingly. With the sale of premium, stuff does go swimmingly, like 90% of the time, just like a pilot. The other 10% of the time, sheer terror for a few minutes. You need to know exactly what to reference. You have to have a guide. We will not only get you in, we will give you literally a flow chart. What do I do if this happens, if this happens, if this happens, if this happens? What if expiration is coming? What if there's assignment risk? Okay, what if? That's what we do here. That's what we do here. I mean, we answer those questions. We'll give you the right probability for the trade. We'll give you how many option contracts do you trade for the account size. Okay, when do you actually close your premium sale? What if the market sells off big? How do you bail out of a trade? What if we rally massively? Can I fix a losing trade? This is about how. It's about when. It's about why. It's about what price. But I'm telling you, it's just the beginning of the variables that you're going to face while selling Ultima options for a living. Okay. Listen, you can read about selling Ultima options premium. In fact, you can read about selling options till you're blue in the face. There's probably 10,000 different Google pages that come up about selling options. Maybe you've even built a few of these trades in the past. You're like, I did an iron condor and it worked 4 times until I lost. I'm telling you right now, that's not what we do here. We build recipes. And what you need is TheoTrade's recipe for success. There's 20 plus years of trading experience. That's just me. And TheoTrade is not like a one-trick pony, okay? We have 7 other full-time instructors here. I had access to client order flow for 15 years. Literally, we have viewed and studied millions of trading accounts and still have that data and still reference that data. I mean, I ran education for Thinkorswim and TD Ameritrade for 15 years. We had the largest options order flow in the industry. That's where this criteria comes from. It comes from my experience, but more appropriately, it comes from big data and it comes from retail client experience. Criteria, people, is your recipe for success. And the following strategy and the corresponding criteria, it requires the utmost attention to detail because we spent years fine-tuning, okay, the sale of Ultima trades. We spent years fine-tuning the criteria. And when you actually approach the section, okay, on criteria, you follow the steps to build a trade, okay? We are doing a live class. I am doing the live class, Ultima Income Generator course. I'll be the trade instructor. It is live February 23rd, and it is live February 24th. Now, I posted the times up there before I even go any further. I'll tell you right now, okay? It's recorded. It's a 5-hour class. It'll probably be 6 hours by the time I'm done with Q&A. The course is archived immediately following the live presentation, like instantly, okay? You'll have 24/7 access to it and download capability because we have TheoTrade mobile for iOS and Android. You don't even have to have a computer. You can have a tablet. You can even do this on a phone. The class has a slide deck with it. That slide deck, we put it in a PDF format. It has all of the entry and exit criteria. It's the checklist, and that is available, okay, for download on February 23rd. Listen, this is a class. We will get you ready for the class before you come to the class. It's why you're like, wait, it's only February what? Okay, it's earlier February right now. This class is coming up the 23rd and 24th. We will get you ready for it between now and then. If you know absolutely nothing about options, we will get you ready. The class is $497. We have a spectacular deal for you today. So bear with me for a second, because before I go any further, again, the class is live. It is live those days. You do not necessarily have to attend live, but hey, I suggest it. I like when people come live. People are immediately intimidated about the $497. Let me tell you right now, what we do here at TheoTrade, we do not sell any individual classes anymore. We're done with that, okay? Listen, we have watched the market education industry for 20 years. And I say we, it's myself, it's Jeff Bierman, it's Corey Rosenblum. I mean, it's Brandon Chapman, Slim Miller, Tony Rago, again, Matt Williamson. All of us been, okay, in this business for 15 years or more. Most of us actually worked for Thinkorswim and TD Ameritrade before actually we launched TheoTrade. But the point I want to make is we watch the education. We've watched people sell classes for $497. And then they sell you an indicator for $4.97 because that indicator is needed for the class. And before you know it, there's a new class for $4.97. Why do you need this class for $4.97? To learn how to use the indicator from the initial class. It's insane. Okay, we've had enough of it. We've had enough of like the big garbage, the pitches, the everything. I'm telling you right now, stick with me. You stick with me for the next 5 minutes and I'm going to show you. We will give you everything that you need to learn this business, everything that you will need to learn, okay, for ultimate income generation. You want to sell premium? Okay, we will teach you literally soup to nuts. You need indicators? We have it. If you need support, you email us. We'll actually answer trade related questions. By the way, I don't duck from that at all, right? You email us. We will give you everything that you need in this business. We will do it at one price. Okay. We don't even do like a membership anymore. And I'm going to show you that right now. Before I get there, and again, remember, write down February 23rd and 24th, because that's the day the classes are coming. Listen, this is the course curriculum. And I just want to take you through it. And then I'm actually going to show you, okay, what TheoTrade is really about and what the cost of this happens to be. Learn how to generate consistent returns, okay, with selling Ultima Premium. How to build a portfolio of high probability trades that generates consistent monthly returns regardless, okay, of the capital level. And I throw that capital level out there again because in your experience, it's not, okay, a necessity to have that detailed experience. It's not a necessity to have tens of thousands of dollars. You're going to get detailed entry and exit criteria for selling options premium while mitigating or keeping risk to a minimum. Discovering option Greeks. Don't let that scare you. We are going to talk about Delta. Delta, Delta, Delta. Okay. You're going to learn how to manage your positions. Okay. You do have to learn just a little bit about Delta. I promise. Okay. It'll only hurt for 1 minute. I promise. Okay. You're going to learn to use a risk array in order to visualize profits. Okay. And risk before markets ever make the move. So I'm actually going to get to profits. Like, I like to talk about risk. I want you to know, like, hey, how much can I make? What's the dark side of the force? You need to see that. You need to see that. And the risk array is the lifeline. Okay. How to properly allocate in a way that reduces risk, right? And allows you to minimize any risk in the portfolio. Again, very, very hands off. This part's important, very part-time. Discover risk mitigation techniques designed to hedge the most extreme market environment. Don't get caught off guard. I said one of the last bullets I had there. What if we crash? What are you going to do? That's what that's about. And there's an entire section in the course for it. How to sell premium in small accounts, retirement accounts, okay? Innovative new products and trading vehicles that have never been available before. So we're actually, again, really going very deep in this class to some of the new products that tie up substantially less capital. That, again, all of this is going to be covered in a 2-day span. It's a 3-hour course, then a 2-hour course. And we broke it up into 2 days, okay, to make it a softer, gentler, easier, okay, to absorb. 5 hours in 1 day and you would lose it. Listen, it's not bad. Catch it on the archive if you can't catch it live. Here, that's the curriculum. Let's get into it. Everybody, I call it a bonus, but I just want you to know right now that TheoTrade, we go beyond one class or one indicator, okay? Like, we get that people want everything. They want everything to trade. They want everything to invest. They want it at one place and they want it at one price, okay? We understand that, and this is what we do. Our first bonus today, we give you access to 98 trading classes. It's the full library of classes since we have started TheoTrade. Okay, when I say the whole library of classes, yes, you get access to Ultima Income Generator. And that class is going to stream live. And I'll give you all the details of that class, but it's going to stream live February 23rd and 24th. It's coming. And I'm going to tell you right now, okay, we're going to get you ready for it. That's why I'm saying you got to do this today, because you got to get ready for it. All right. Take a little bit of time, get ready for it. I want you to be, even if you're really experienced, get ready for it. It's not going to take a huge amount of time. We give you access to that class, but then we also give you access to everything we've ever done. All right. Guide to small account growth with in-out spreads, surviving and thriving in extreme volatility, volatility back spreads, black book spreads, collecting income being short, risk twist spreads. I talked about that, right? Iron Condor, selling premium, minimizing risk, day trading NASDAQ futures. We also have day traders here, okay? We have covered calls, essential. I mean, people, you name a genre of trade, we have a class on it, okay? You name a genre of trade. Like, it's literally, people look at TheoTrade and they go, that's totally overwhelming. I think it's worthwhile. Okay. I think it's just no holds barred. And I think it's a great way to, you're going to decide what genre of trade that you want to be in. Okay. This is about ultimate income generation. But we're going to give you access to over $9,000 in classes alone. Okay. And again, those classes, I want you guys to know, I didn't do 98 classes. Let me briefly introduce you to TheoTrade. These are the TheoTrade instructors. Everyone here at TheoTrade has a minimum of 15 years of experience, okay, in trade. First in the docket here, Jeff Bierman. Jeff also worked with me at Thinkorswim and TD Ameritrade, analyst, okay, former chief market technician. If you've ever used Thinkorswim charts, TOS charts, Jeff Bierman built over half the studies on it. Jeff is also a professor of finance at DePaul in Chicago. So he's actually teaching a graduate level class at DePaul in Chicago, and he moonlights with us here at TheoTrade. So again, you can see Jeff at DePaul for $42,000. I think that's a year. Hopefully it's not a semester, but Jeff is over at DePaul and also teaches here at TheoTrade. Next in the docket, Matt Williamson. He's our market neutral, okay, premium selling option strategist. So Matt is the kind of like, he's like the engineer here. Matt is the guy that's into spreadsheets. He's our resident geek, if you will, here at TheoTrade. Next in the docket, Corey Rosenblum, senior strategist and our resident swing trader. Corey is a CMT. Jeff Bierman is a CMT. Brandon Chapman is a CMT. We have three CMTs on staff. If anybody has any idea what that designation is, I won't go into it. It is an incredibly difficult designation to achieve. We have three of them on our staff here. Next in the docket, Brandon Chapman. Brandon is macroeconomics, technicals, and fundamentals. Brandon also has another claim to fame. So Jeff Bierman worked at Thinkorswim TD Ameritrade. Brandon Chapman also worked at Thinkorswim TD Ameritrade. Brandon wrote course manuals, okay, for TD Ameritrade. There was an education group inside of TD Ameritrade, and they used to do an 18-month long class, and it cost $24,000 for an 18-month long class. I promise you, somebody in here probably took that. Like literally, somebody probably took that class and paid 24 grand. Brandon will actually tell you what we do here at TheoTrade will absolutely smoke it. It'll just smoke it, right? Next in the docket, Steve Slim Miller, 43-year veteran stock options and futures trader. I put a lot of weight into Steve Miller. I've known the guy since I am a kid. He's also our resident and in-house psychologist here at TheoTrade. If you have some issues with trading, you know, in your own head, we've got courses for that as well. Tony Rago, NASDAQ futures intraday strategist. Okay. We're not just premium sellers. We're not just, you know, this. Each of us have our own genre of trade. Like we've literally built like the Netflix for traders. You want a swing trader? We have it. Okay. You want macroeconomics? You want to know about currencies? We have it. You know, psychology? We have it. Futures trader? We have it. And we brought on the best in the business here. Last on the docket over here, but definitely not least, Blake Young. Blake is our most recent instructor. Blake's actually into market profile, futures, currencies, is a commodity trader. Blake also worked with us again, Thinkorswim and TD Ameritrade, and comes to us with just, I mean, huge experience. These are the instructors that built those 98 classes. This is what they look like. It's kind of a motley crew. I'm sorry, but yeah, this is some of the instructors. But I took a snapshot of Zoom. Tony Rago, Corey Rosenblum, Jeff Bierman, Steve Miller. Okay, I mean, everybody's pretty much packed in here. Brandon Chapman, Blake Young, Matt Williamson. There's our geek, our resident geek in there. All right, bonus number 2. We're going to give you an all access pass to TheoTrade for the next 3 months. You're like, what is that? Okay, literally, we have a live trading room, okay, and we broadcast live 6 hours per day. So 6 hours per day, literally bell to bell. It's actually 6.5 hours a day. It's bell to bell. We are broadcasting. I know not everybody can actually watch 6.5 hours a day, but we're trading throughout the course of the day. In fact, here, okay, if you're kind of curious what this looks like, and I promise I'll show you everything here in a moment. This is TheoTrade. Okay, let's say this is TheoTrade. This is what it looks like. Okay, this is live right now. So when I say it's live, people. Okay, this is TheoTrade. So I can unmute.
So that's how we add levels.
Okay, it's actually Tony Rago. He's actually scalping NASDAQ futures live right now. Okay, he'll actually show you the trade screen. Everything we do is live. It's real capital in all the different accounts. All right, I'll show you a bit more about TheoTrade. We provide real-time trade ideas, real-time market insights. We actually do text and push notification to the trades. We have 5 distinct trading portfolios. So if you want to follow what we're doing, we can do that, right? You can do that. You can just look into the portfolios. I'll show you in just a minute. We have daily coaching sessions with timely topics. Jeff Bierman's kind of our in-house continuing education. Why not? He's a professor of finance. And I put huge amount of weight into this. We directly answer your trading questions via email. And I put so much weight into that is because if you have a question that comes up after this class, if you have a question that comes up before this class, ask it. Okay, that's what we're here for. So it's access to another $1,000 in support, trades, and insight. Okay, it's worth $1,000 just to be able to email us. Okay. In addition, we give you 59 proprietary indicators and scans. It's everything we have, right? Expected move. I'm going to give you the auto expected move. And I want to hit this again. I'm going to give you the auto expected move indicator here in a few moments. We also have gravity points, RSI, Laguerre, Quantix. I use Quantix constantly. I'm looking at it on the other screen over here. NQ levels, which is just what you saw with Tony Rago. Okay, literally, there are 59 indicators and scans. What I'm getting at is we don't leave anything to the imagination. We don't, push like, oh, you got to buy this indicator after taking a class and you got to buy another class. It's not how it works here at TheoTrade. It's all included. Okay, we give you access to another $1,800 in indicators and scans alone, right? And the third bonus, this is brand new, Theta live portfolio. So I have opened up a portfolio only since the beginning, okay, of the year, knowing that we are going to do this live class. It's a positive Theta portfolio. It is an Ultima premium selling portfolio, totally no holds barred. You will see everything that I do, okay? Every approach, okay? When I say you see everything, everything for better, for worse, full disclosure on all trades, opening, closing, hedging positions. People have asked me to do this for years. I said, I feel kind of constrained. I feel like, I feel like I have to, do a little dance, in there, okay? You're going to watch everything. And it's a brand new portfolio. It's called Theta. It is live, and it is live right now. And I'll show it to you here momentarily. You're going to watch me trade and discuss positions like never before. And I'll tell you what, we're even going to do a Theta small account. So there's this one is actually no holds barred. Like, I don't care what the margin is. I just don't care. I'm doing whatever I want, and I'm letting you know. And I hope that's okay with you. Okay. But I'm also going to introduce a small account portfolio for people that are going to have, like a couple $1,000s in the account so that they can follow along with that. So everybody feels that they can be, inclusive in there. And what this portfolio looks like here, look, Theta, view every trade. I started it off. Okay. I started it off really, really small. I'm doing a bunch of one lots in here. Don't you worry about a thing. We're going to ramp up. Okay. You get to see everything. When I say everything, every trade, you'll be able to scroll down in here. Done trades in spiders, IWM, QQQ. You can see Tesla. There's bond trades in here. Okay. Again, this portfolio is anything and everything that I want to trade. No holds barred trading. Okay. Nobody ever does this kind of stuff. And I'm doing it because people deserve now to be able to see everything. And again, if you don't have that kind of capital, we'll have a small account portfolio in there for you. I'm even going to do a weekly update so that like, why did he do that trade? I'll explain it. Okay. Every single week on a Friday morning, okay, I'll actually go in there and say, this is why we did the trade. This is what I was thinking. What's going on? Listen, what our members are saying. This actually comes from Ken. Woohoo, thank you. I'm never sure of the trades that are new to me that I structure myself. This is great to hear. Not to brag, but this is due to you and your magnificent team. Again, this is on August 3rd. Okay. I'm up over $1.67 million in profit. I'm going to tell you right now, Ken actually trades with a bigger account. So this was just a quick thank you from Ken. I actually just got an email from him 2 days ago. So we go back and forth quite a bit. And listen, we're really close knit here at TheoTrade. We have over 6,000 members, but people email us and we want you to have that communication with us. Listen, TheoTrade includes everything that you need to invest. It needs everything you're going to need to trade. We will give you classes. Okay. And I want to make sure that it is everything. And that means a lot. Classes, coaching, email access to the instructors, live trading room and live trades, okay, indicators and scans, mobile access. And I want to hit this again. Email access to the instructors. If you want to talk to me, you can talk to me. It's on email, okay? Everything that you're going to need to succeed. I mean, what we've really built here in terms of the classes, TheoTrade is the Netflix for traders. Today, now, okay, total Theo, it's $297 for 3 months. Stop right there. not a membership. We don't do memberships anymore. I just let you know that right now because everybody always asks the question, is this a membership? Is it an introductory price? Listen, it's $297. Why do we do that? Because we have 6,000 people right now on TheoTrade. We want to continue to grow the user base. And that's what we're about, right? It's literally everybody should have access, okay, to incredibly good information, incredibly good education. You can't even talk to your broker dealers anymore. You ever try to call the brokers anymore? You can't. You got to have somebody to bounce ideas off of. So it's going to cost you what? 99 bucks a month. It's 297 for 3 months. And I'm going to tell you right now, okay, before you hop in here, just bear with me for a second because it includes everything. Ultimate Income Generator course. And again, after 3 months, everybody always asks, what is it after 3 months? It's 297 bucks if you want to do it again. We ask you though, it's not a membership. What happens if you want to do it after that 3 months? It's 297 bucks. We don't, again, it's not a membership. It's not like the gym membership. How do you get out of a gym membership? You don't. Okay. Listen, it includes the Ultimate Income Generator class live February 23rd, 24th. Gives you access to 98 classes. There's new monthly classes. So not only are we giving you Ultima trades, we're going to have classes that are coming up on a monthly basis. Okay. Over the next 3 months, you're going to get a lot more classes. There's a live trading chat room. Okay. 6.5 hours a day, real market insights, real trade ideas, 59 indicators and scans, text and push notifications, daily coaching sessions with timely topics. And you can email us. And I'll tell you right now, just if you emailed us, it's worth the 297 bucks. We can save you so much money. People would be amazed. TheoTrade.com/SKEW. It's S in Sam, K is in kick, E is in echo, W. Okay. TheoTrade.com/SKEW. You can enroll now. Okay. One other little kicker to this one that I want to make sure that everybody hears. This is the first time and only time we are doing this. TheoTrade's a riskless trade, okay? It's the only time we're doing this. This is everything you need to start trading from novice to expert. And I say novice to expert. Listen right now, okay? This is TheoTrade. There is a start here menu. You know nothing about trading. Options 101, options 201, we'll ramp you up. The money back guarantee. We've totally revamped this. We've totally changed it and I want you to see it, okay? If you're not satisfied anytime in the next 90 days, just email support@theotrade.com, receive a full refund. Money back guarantee has no stipulations on it anymore. We're done with that. We're done with it. Okay. It's too much of our time wasted. There is no money back guarantee stipulations. There are none. There are no excuses. There are no questions on our behalf. Okay. There's no commentary needed from you. If you want your money back anytime in the next 90 days, just email us, ask for your money back. That's it. Okay, we stopped with all that garbage like stipulation, you have to do this and jump through a hoop. Forget all that crap, okay? Because no one in this business can stand toe to toe with what we do at any price. And we realize that. So we just took off all the stipulations. Listen, it's a money back guarantee. We try to make this as easy as possible for people, right? And it's important that you guys know that. So there's no stipulations, just receive a full refund. We want you to be here and we want you to want to be here. And I hope that that's all right with everybody. So again, you're going to go to theotrade.com/SKEW in a moment, but get into TheoTrade now where we're going to work with you directly. Listen, we will do 50 spots. Okay, we have a lot of people on tonight. There's a lot of people on actually right now. We will do 50 riskless spots. Okay, why do we do that? We have to do unlimited email mentoring, which is a lot for us. And with 6,000 plus clients on here, we'll do 50 spots on the unlimited risk deal. And again, for any reason, okay, no stipulations, money back guarantee, unlimited email mentoring, okay? I say send us your trades. You know why I put send us your trades? Send us your trades because you want somebody to be able to bounce trade ideas off of. The 297 riskless offer, it's never been available before with Ultima Income Generation class plus the new Theta portfolio. There's never been this. There's no stipulations on the money back guarantee. Okay, so do it. Be one of the first 50. By the way, I will read off the names of the first 50. So access today, Ultimate Income Generator course. Go to theotrade.com/SKEW. We give you access to TheoTrade for 3 months. We give you access to every class that we've done. We give you access to all the different indicators. And of course, we give you access to the Theta portfolio, which I'm trading in. And I'm going to take you over to the site right now, and then I'm going to answer some questions in here because I want to make sure that everybody's on the same page. And again, I'm going to throw this up. It's theotrade.com/skew. It's S as in Sam, K as in kick, E as in echo, W. Okay, so theotrade.com/skew. We actually popped in the address in there. Here, let me actually pull up the web page really quick because there is one aspect I want to show you. All right, so this is theotrade.com/skew. As you're enrolling, there are currently 50 spots left. As I said, I will read through the names as you are enrolling for this. Okay, so I'll literally like read through the names and make sure that everybody's comfortable. They're one of the 50 people in here. And again, there's no risk. And if you wake up in like 3 days and you go, I don't know if this is for me, it's fine. Start going through the classes. And I'm telling you, get into it early and start going through the classes. Okay, to enroll for this right now and attend. And by the way, you can start attending today. TheoTrade is live right now. When I say it's live right now, it's live. This is live. Okay, Tony Rago is live. Corey Rosenblum is coming up here in the next 10 minutes. So we're live right now, and I'll show you a little bit around the site. But when you actually hop on, okay, click right here on Add to Cart. There's a couple things I want to show you, 2 aspects I want to show you when you click Add to Cart. Okay, first and foremost, when you are filling this out, this is the enrollment form. When you're filling it out, put your phone number in here. Okay, it's not about us calling you. Put your phone number in there because it automatically enrolls you for text messaging. Okay, some of you are like, I'm out of the country, I can't get text messages. If you are not in the United States and you cannot get text messaging, have no fear. We have a mobile application and we also do push notification. But I suggest when you're filling this out, put your phone number in. Number 2, okay, we do 3 different payment methodologies because again, everybody's different in where they are in their life. Like they just are. Like we get that. You can pay $297, you can pay $149, pay it in 2 payments. You can do, a couple of payments, 3 payments of course, of $100. That's fine. Okay. So it's again, it's $297 in here. So I just wanted to give you the payment information as it stood in there. And again, come right in here, Theo Theta portfolio. That is also, so it's theotrade.com/skew. As I said, I'm going to come in here and I'm going to answer as many questions as I possibly can momentarily. Okay. By the way, I wanted to also bring you a little bit into TheoTrade and just show you around. Okay. This is TheoTrade. So what you're actually viewing right now, I'm going to hit refresh for a second here, and I'm going to stand up and cool off the room. So I don't want to make anybody jealous, but I just had to turn up the air conditioning because it's really hot outside. Okay. Yeah, it's 84 degrees here. Shh, don't tell anybody. Okay. This is live right now. This is TheoTrade, and you can actually see Tony's actually calling out different positions in here. Okay. So we are literally like scrolling through, and these are, you can see the highlighted posts, right? The highlighted posts are calling out positions throughout the course of the day. This is a chat room. That chat room hosts anywhere, okay, from 3 to about 5,000 different people a day. Again, there are 6,000 people here at TheoTrade. People enter and exit the chat room throughout the course of the day. We broadcast all day long, and this is what it looks like, right? You can also hop on mobile applications as well. Next in the docket over here. So that's what the chat room looks like. The Start Here menu. The Start Here menu, and again, you're going to pay $297 for 3 months here, right? If you just went through the Start Here menu, even if you're really, really experienced, okay, really experienced, and I stress to you again, it's $297, but it's a one-time fee. And if you want to do it again, you have to pay another $297. But even if you're experienced, I challenge people all the time. I'll tell you right now, come in here, just watch order execution part 1, 2, and 3. That'll save you more than $300. Okay. I'm telling you right now, I'm serious. You don't think so? Get in there and watch those order execution classes. You don't like it? Get your money back. I got a better one for you. Okay. That's just the Start Here menu. Okay. Then you get into the classes. We have 98 classes in total. There's option classes and option newbies and technical analysis and day trading. You're getting access to all of this today, and you're going to be able to hop in there. Option strategies, that's kind of my mantra, right? That's where, this is where I spend a lot of time. But I'll just show you what a class kind of looks like in here. In fact, I'm going to give you access to this class today. It's Sell Options Premium for a Living. Okay. And when you start coming in here and learning this, you'll be able to download the class slide deck, right? That easily worth 300 bucks. I'm telling you, it's going to change the way you feel about the entire marketplace. For those of you, all right, for those of you, if you need like a psychology course, I was talking about this earlier. Okay. Slim Miller has a class in here, the 5 essential building blocks to successful trading. It'll change the entire way that you look at this business. I mean, that guy has done more in this business, right, than most of us will ever dream of. He's forgotten more about trading than most people will ever know. 5 essential building blocks to successful trading. Okay, that class when it originally came out was $1,000 by itself. It's worth every penny of it. Okay, we give you that and everything else that we offer in here at TheoTrade. The next thing, in terms of TheoTrade, different portfolios. People go, well, I want to see the Theta portfolio. I can click on it. Okay, I showed you a screenshot, but this is what the Theta portfolio. Okay, but I'll also be showing like these are all the trades. I just kicked it off this month. Okay, these are some of the trades that I've actually done in here. Open, close, open, close, open, close. Listen, we will show you everything that we do in here. It's the full Monty. And I will also show you my account throughout the course, okay, of trading sessions. So again, this is a little bit about what TheoTrade looks like. And again, for the first time ever, we're doing a money back guarantee with absolutely unequivocally, there's no stipulations on the money back guarantee. By the way, there's somebody else asked, it's theotrade.com/skew. And I'm going to get some of the questions here. All right. Oh, when is the small portfolio going to start? I'm going to start the small portfolio after the class. I need the class before I can actually start firing that off because I need everybody to be on the same page. So that's actually an awesome question. So the small portfolio is end of February. By the way, what our members are saying, oh, I want to reiterate again, it's $297 today, theotrade.com/skew. What our members are saying, this comes from Steve, September 23rd, and I love this one. This is exactly what we're going for. Your organization continues to blow me away with insights, expertise, resources, personality, and structure. I've learned so much of being able to apply knowledge to improve my trading exponentially. Thank you, and thanks to all of your staff for everything. I'm grateful I found TheoTrade. I'm grateful I have the sense to choose your organization as my mentor over all the other players in the marketplace. And now that if you added Blake Young, whose style I enjoy immensely, starting to adopt. Don't know what else to say, but TheoTrade's awesome. So I love this one. Very satisfied customer, Steve in Southern California. Again, go to theotrade.com/skew for the link. Here's another one from Todd Summerall. I'll just sum this up. We saved Todd his entire portfolio. He sent me an email. This email comes from March of 2020 when the market was crashing. But the reason I throw this email out here is I told, in an email, I said, smash your Delta or you're going to lose your entire account. So we smashed it and I saved his entire account. And I like to throw this one up here because when you email us, you don't have to email us and be like, what if my brother-in-law had a position? We don't do that here. Email us, give us the details of your trade. We'll give you back information. Again, I had every brokerage license in the business. I know how to answer trade and trade related questions, okay? And I'm comfortable doing so. And so is everybody else here in the TheoTrade crew. So your questions answered. Let me actually answer some questions in detail here. Again, it's theotrade.com/skew. Before I get into these details, okay, listen, we are completely packed right now with people that are enrolling for this. And I'm actually going to run through. Barbara, here, this is going to be a mouthful. So you ready? I'm going to read through the names of those that are already enrolled for the riskless trade. Barbara O from Utah, Katrina from Oklahoma, Eric J from California, Fran Snyders from South Africa. Thank you, by the way, for staying up so late. Steve M from New Mexico, Linda D from Michigan, Garth H from Kansas, Todd M from California, RJG from Michigan, Lenny Z from Alaska, David D from New York, Chris O from Washington, Paul H from Florida, Carl H from California, Timothy B from Maryland, Chuck M from Colorado, Mark B from California, Jason J from Canada. By the way, we also have Canadian suggestions for brokerage firms. So of course you can email us about that. Salvador C from Florida, Karen W from Florida, Daryl S from Florida, Barry F from Texas, Lennox E from New York, Carl P from Massachusetts, Brian B from Canada, Warren P from California, Pransana C from Texas and Michael F from Virginia. Those are just the first handful of people that have come through. It takes me about 5-10 minutes before I actually see it on here. So let me answer some generalized questions, and then I'm going to get to some specific questions. And I promise we'll stay here and try to answer your questions. General questions. People always ask me, okay, what do you need to get started? You need a laptop, but today I don't think you even need a laptop. I think you can actually use your mobile device. I don't have it sitting here, but I use an iPad, and I trade a lot off my iPad. I use my phone. By the way, if you have the means, Apple Watch. The reason I love the Apple Watch, all of them do it now, but like it's a notification on my arm that I've gotten filled on a trade. Just suggesting it. It's only like $200 these days. We have everything you're going to need. Like from absolute novice to the most extreme traders. And there are some extreme classes in here. I don't mind saying that. Like there's some extreme classes in here. And there's people that come here that are portfolio managers, that are professional traders. There's people that come here that have absolutely no experience. And we try to have an instructor in a genre for everybody. Number two on here, I'll reiterate this for like the 10th time. It's not a membership. Everybody asks me that. We will not auto renew you or bill you again. Okay. The reason I reiterate that, and I say that like 10 times, and we even put it in here. Okay. When I say we put it in here, we put that in here, it's a single payment of $297. We put it in there because I myself over the years have had a bad experience with a gym membership. Okay. And it's not that long ago. It was the onset of COVID. And I've had it before, and it just makes me nuts. I can't stand the membership that you can never get out of. So we didn't build that here. And yet at the same time, we still have over 6,000 members. So obviously something, right? Sorry about the noise over there. That's a fill on Tasty. So that's my video game fill on Tasty Works. Everything alerted me. My watch alerted me. Okay. The next thing on here, we're now providing weekly TheoTrade video updates. So you can follow all the moves we make. So there's a video update. It comes out Friday morning, and it'll tell you like, what am I doing? It's only a 10-minute video. So if you can't watch TheoTrade throughout the course of the week, in 10 minutes, we recap everything I've done in TheoTrade portfolio, everything. Okay. TheoTrade, we archive everything, every single instance of everything we talk about. We understand that you can't watch everything live throughout every trading session. We archive everything. And literally every moment we speak for 6.5 hours. We also give you access to TheoTrade Mobile. So we built our own mobile application for both Apple and Android. And we have both devices here as well, just to make sure to test it. And you can view them at your leisure. You can even download them. Okay. You can download them on here and view at your leisure. You can even play it back at 2 times the speed. So if you think I talk fast now, wait till you actually hear me at 2x. Add your cell phone number when enrolling to receive text messages, okay? And push notifications for our mobile device. You can email us anytime. There's only one thing here, okay? You got to give us 24 hours. It doesn't usually take us 24 hours to respond, but the reason I put that in there, people will email us on a Friday afternoon. There's 10 minutes to go to a close, and like, what do I do? Please, okay? I will answer your email. I will answer it personally, but don't email me right to go into the close, because I trade and I trade a lot, people. And it's, I took off, and I was telling the story earlier today. After I exited TD Ameritrade, and I exited TD Ameritrade, people always ask why I left TD Ameritrade. In 2009, TD Ameritrade acquired Thinkorswim. And people like me, I was an executive at the time. I had a 5-year lockup, and 5 years in one day I exited. And so it was a planned exit for 5 years, because it was a really good deal, by the way. It was a really good deal for me. So I stayed for 5 years, and my lockup expired in early 2015, and I exited. I spent 3 weeks, and my wife, she was like, I would trade all day, and I'd be talking to my screen. My wife's like, you should put a microphone in front of you and just stream it out to people, because first of all, it's hysterical because you talk to yourself all day while you trade. And secondly, she goes, I think people would actually like to hear that stuff. So I was attributing all of TheoTrade to my wife earlier today, but it was her own sanity, as I found out, because I spent 3 weeks where I was doing nothing. And she was like, you're driving me crazy. You have to do something. So here's TheoTrade. By the way, there's a bunch more people enrolling, and I'll read off your name here momentarily, and then I'm going to answer more specific questions. Again, email us anytime, gain access. You're going to gain access to everything we've done in the previous 5 years. Classes, coaching, live trading sessions, archives are all searchable. By the way, we have a search engine built into TheoTrade. So you'll find it in here. If you go to TheoTrade and you go to member home, okay, the member home, we actually have a search engine built in here. Okay, so the search is right built in there. By the way, we are here to help you, but you can also chat in on Zoom for help, but you can also chat in right here, right below where it says add to cart. Also, that indicator that we talked about earlier, it's right down here, the auto expected move indicator. It's located right on the bottom of that page. That page is, again, theotrade.com/skew. So variations of trades, okay? Any of the trades that I've done, variations of those trades are available inside of an IRA, retirement account, or an account with as little as $2,000, okay? We're here and we can get you approved for options at several major brokerage firms. We make that really easy for you. You guys will see as soon as you come into TheoTrade, we say use this brokerage firm or use this brokerage firm. There are 50 riskless spots available. And for the first time, we've never done this before, but for the first time, we have no stipulations whatsoever on the riskless trade. By the way, a few more people have enrolled. We only have a handful of spots left on the riskless trade. Mark P. from Vermont, Mary J. from Texas, Regina G. from North Carolina, Grant D. from Canada, Ronnie P. from Tennessee, Lorianne from Ohio, James D. from Michigan, Norma C. from Canada, Paul M. from Kentucky, Gail P. from Michigan, Alan P. from California, James J. from Oklahoma, Merv C. from Oregon, Roxanne D. from Virginia, Phil P. from Texas, Francis M. from Florida. Again, I'm just reading off a couple of the names. Let me get now to some of your specific questions. One of the first ones came up as, what does it cost? Okay, $297. Okay, and it's not a membership. That was one of the first questions that came up. So, all right, Glenn actually said, I heard selling calls and puts naked can be risky. Is that true? The answer is absolutely unequivocally yes. Selling naked can be risky. This is much more about the risk mitigation tactics to make it not risky. I mean, that is the bottom line key here. And I stress this to you because I'm actually reading through some of the questions. The bottom line key here is that you understand we do not want our clients into risky trades, okay? Because that doesn't do anything good for you. We are all about risk mitigation. So you see us selling premium naked, and if you're not comfortable with that, we're actually going to show you alternative means. In fact, okay, we've actually got a course that you're going to watch as a primer for this class. When you enroll, right now, you're going to get an email. The email will have username and login, but the email is also going to have a couple of what we call like prerequisites. As I said, this class, we want to get you ready for it. Okay. And it's not a huge amount of work, but we want to get you ready for it. And in getting ready for it, we're going to have you a couple of classes and you're going to learn that there's ways to mitigate risk that you never even dreamed of. And it's not that difficult. So I agree with that statement, Glenn, but we want to be able to mitigate that risk. Okay. Victoria, yeah, Victoria said, you selling naked or you use spreads? The answer is yes, both of them. You will see me, okay, in my portfolio selling some naked options premium because I told you that I'm going no holds barred in the Theta portfolio, but you will also see me, okay, mitigating exposure for those of you that are a little bit newer, okay? Fully naked needs some experience. We're going to start everybody by holding your hand. We're going to start everybody with this smaller Theta portfolio for small accounts. And that is a portfolio that is not necessarily going to be just naked in there. All right, moving right along over here. Okay. Oh, somebody said, hey, I like this one. Is there a way to measure skew? Absolutely unequivocally, yes. The symbol is, here you go. You want the symbol? Okay. This is the easiest way to measure skew. Now, there's a bunch of different ways and different products to measure skew. There's actually a symbol called skew, and symbol skew is calculated once a day. It's at 136 and change. So the answer is yes, you can calculate skew, but you can actually, I can teach you a quick way to do that in individual stocks as well. It's kind of cool because that's what the Ultimate Trades is really about. All right. Good. By the way, somebody said, are VIX spreads taught in the Ultimate Trades or are they in a separate course? Awesome question. The VIX trades, okay, are one of the prerequisite classes. So what we're actually doing is the Ultimate Trades. The Ultimate Trades is how you're going to go out and you're going to sell premium, okay? We're actually in the prerequisites. We're going to have you watch a handful of courses. One of them is actually going to be about VIX, and it's a pretty nifty little class. By the way, that class, that one is the accumulation of years and years of work, okay, on my behalf to build the VIX class to make it accessible to everybody. So Sydney actually asked a great question. Do I need portfolio margin? No, you don't. No, if you have portfolio margin though, more power to you, because that's actually kind of cool. I mean, portfolio margin. So for those of you that speak geek, portfolio margin is an entirely separate margining system that is available to some larger clients. And if you have it, fantastic. I actually built a lot of the calculations in Thinkorswim for portfolio margins. Part of my my baby. It was part of my my job over there. Oh, you know, somebody actually asked, hey, do you prefer Tasty to trade options? So yeah, Tastyworks is it's getting better every single day. This is like a newer brokerage firm, and this is from the founders of Thinkorswim. And we will talk about Tastyworks in the class on February 23rd and 24th. I mean, we're actually going to take you through and actually discuss a little bit about the brokerage firms because you know, everybody likes something a little bit different. I'm actually going to show you what brokerage firm might be best for you, depending upon, you know, what you're doing in this business. So, by the way, again, it's theotrade.com/skew. I want to throw that back up here as I am answering more of these questions because there's still a few people asking about the website on here. And there it is, theotrade.com/skew. All right, next one on the docket over there. Okay. Oh, somebody said some, do you get taxed more on options? I always say this about, Mike was asking, you get taxed more on options. Hey, listen, okay, pay tax and ask questions second. Paying tax is a very good thing. Yes, but I got a kicker on that one. In the class, we're actually going to show you some of the most tax beneficial like the tax beneficial products. Some people know what I'm talking about. It's called Rule 1256 products. It's the 60/40 rule. So because I was in the brokerage business for a lot of years, I also know many of the tax regulations as well. So don't worry, we're not going to leave that out. Okay, just continuing on down over here. Oh, somebody said, what kind of stop losses? No stop losses. Sean, we're not going to use stop losses. We're actually going to use trades like VIX volatility spreads to cover a lot of the risk, not all the risk. Listen, this business, there's always going to be some degree of risk. There's going to be give and take. See, the key in this business is you make money. You do trades with a 90% probability. You make money, you make money, you make money, you make money. And eventually somebody's like, oh, I took a huge hit and it killed me. Well, how about this? You make money, you make money, make money. When the hit comes, and everybody's going to take a hit sooner or later, the hit is actually going to be nothing more, okay, than a brush, because we're going to use some risk mitigation tactics. And that's what people miss. And to produce positive expected returns, what you need is a risk mitigation tactic. And that's exactly what we're going to give to you, okay? Somebody said, do you need any technical or fundamental analysis, okay, to do what I'm doing? No. Listen, I'm actually a quantitative trader. I didn't really explain that a little bit. So I don't mind saying that. I'm a quant. Okay, what is a quant? I'm a math geek, so I'm about probability. Now here at TheoTrade, we have surrounded myself with a bunch of market and technical analysis traders. I'm not that into it, but if you are, absolutely, okay. But nothing that I'm covering, and I'm telling you right now, nothing I'm covering in this coming course has anything to do with technicals. There's no technicals in the course that I'm doing. By the way, yeah, I wanted to reiterate again because there's another question that just popped in here. And somebody asked, once again, what are the stipulations on the riskless deal? There aren't any. By the way, there's only, I don't know, we had 50 riskless spots left and I'm waiting, okay? How many spots left, okay? I'm just actually asking our people. There are 6 riskless spots left right now. There are 6 riskless spots left on that. I mean, there's a lot of people that have actually enrolled already for it. Okay, so I'm just reading down the risk over there. Oh yeah, how does one view the risk profile in multiple positions in Thinkorswim? So Forcan, viewing a risk profile on Thinkorswim, you go over here to the Analyze tab, okay? Take a look at the position and just come over here and go portfolio beta weighted. And in portfolio beta weighting, and I apologize, my portfolio beta weighting, in portfolio beta weighting, you can actually see your entire aggregating position. Okay. And by the way, I'm only in one account. I can pull up a ton of different accounts here, but you can aggregate your positions through portfolio beta weighting. That is something that we will absolutely discuss. We have tons of classes on how to do that here at TheoTrade. So that's probably outside the scope of what I'm covering today, but that's fine. Okay. Oh, somebody actually asked, and this is probably one of the last questions. I promise I'm gonna wrap up over here because there's a lot of questions in here. But how do you mitigate risks to the upside? We actually use a variety. It's called a gamma iron condor. Okay, and we can actually use back spreads. But the gamma iron condor is one of the ways that I'm mitigating risk and exposure to the upside right now, specifically inside of the IWM. So again, we've had a couple more people. Let me see if there's any more names. Couple more people that are asking a few questions in here, and I'm going to try to answer those for you. Okay, let's just see if there's any more. No, we're good. All right, we're good over here. There's actually a bunch more names that are actually piling through right now. But listen, I have eaten more time than I had expected to, and I want to thank everybody for staying with us so long. Listen, we had a lot more people on than we had initially thought would come on here. So by all means, again, I will gladly. And again, we've got a couple more names that are coming through. It's theotrade.com/skew. Okay. And I want everybody to know on behalf of myself, everybody here at TheoTrade, we're here to help you guys. Support at theotrade.com if you need anything after today. The other thing is, you can hop in the chat room right now. Okay. I mean, inside of the chat room, we're there, we're live right now. Just go to the member chat room. Okay. And be like, hey, I'm new. Okay. And everybody would recognize that you were new in here, but it's kind of a quiet day inside of the marketplace. Nonetheless, I am live tomorrow morning. I'm live tomorrow morning for the first hour of every trading session. So stay tuned. And again, thanks everybody for joining us here today at TheoTrade, and have a wonderful afternoon. Bye-bye.